what's going on? Seems to me like there's a lot going on with Bitcoin. A lot of big companies coming in. They definitely want, what was that last one I just read about? Another company just invested a bunch of money. Where did I find that at? Seems it's... God, can't find anything on here. Hey. Yeah, I can't find the company name, but another one just put a bunch of money in there. So of course it's back up over 50 or somewhere around there right this morning. So yeah, it's like 49.6. Anyway, everybody's talking, oh, it's going down, it's going down. Yeah, whatever. But let's get on to something else. You might notice a little bit of a change on the screen. Decided to start putting a scroll across the top for the dividend amounts. Now this doesn't happen every day, but I mean a good portion, especially when you get towards the end of a month, you'll really start to see dividends paying. What a lot of people don't understand is how they pay it and how they can actually either miss out or make a mistake in their trading. But in a lot of cases, I don't even hold. Well, let's back up here a little bit. When you look at a ex-dividend date, let's look at one here. It's important to remember. Let's take this one here, ORC. And we look at that ex-dividend date of February 25th, which is tomorrow. What that means is you have to actually have possession of shares of this stock before that date to actually be able to receive that, 6.5 cents per share. This is a monthly dividend payer. Now, looks like this one's paying, what, 13.5% based on the price, which isn't too bad. I don't know where you can get that kind of return on your money. Looks like I got 195 shares. What's that work out to? I don't know. 195 multiplied by 0.065. So it looks like $12.68. So that's what you're getting per month. And that'll add up to, multiplied by 12. You're making $152 a year. So if you divided that 152 into 1440, or 1414 divided by 152, it'll take you 9 years to double your money, in essence, right? So with this dividend, ex-dividend date, we know that you have to have it in your portfolio before that date. So you could buy it today, and you could you could earn that dividend amount. But it actually doesn't record, so you have to hold it. You can buy it today. You'd have to hold it until the end of business on the 26th before it would actually be recorded as you owning it. Now, most of those dates happen on the same day, but in some cases they can be spread out a little bit. It's just an accounting thing. It has to do with, well, it's different for each one of the underlying. I mean, let's go down to this one here. Now that one's the same. You can do 1 day later for the record. This one the same. And this one the same. This one the same. So pretty common there. But now when you start looking at the dividend payment, they're actually going to hold that money for 4 days on this particular one. This one they're not going to pay you till March 12th. So it's just going to be held in your account. And a lot of times you can see it being held in your account if you go to your statements, and you can see remember what they call it. It's like unrealized, or I'm going to say pending dividend payments. Let's put it that way. I don't remember the exact terminology they use, but come down to this one, March 18th. So it's always in the future, but as long as you hold it to at least the record date, the end of close of business, you are going to get paid that. Now, what that means is, once it's recorded that you're going to be paid, it's held in that account. So you're like, let's go back up here to this one. So we know we're going to get paid on March 29th. But let's just say that this stock decided to go up. It just like doubled in price or whatever. Doesn't matter what the amount was. And you decide to sell it. Well, you'd still get paid that dividend amount as long as it was past February 26th. So that's one thing to keep in mind. A lot of people make that mistake and be like, okay, ex-dividend date's tomorrow. I bought it today and I sell it tomorrow. Well, you're not going to get paid the dividend. You know, and in a lot of cases with the CEF, the stock price hasn't moved enough to justify selling it anyways. So that's why I like CEFs, because you just, unless they go up the amount that you're wanting to make on it, which is that 78 cents past what you paid, there's no reason to get rid of it. You're just going to hold it. These are money making positions. You're not interested in selling them, you know. So we got 195. We need to go to break even. What would that be? Shoot, it's not even on the screen there. Let's see. There's the break even. Yeah, 725. You can see it over here. Yeah. So you just let these collect and just forget about them, you know, unless they come up close to where you're at. You don't really care what this value is. If you hold this for 20 years, you're young and you're just getting into this, you hold this for 20 years, you might double this 2-3 times, 13.5%. You can buy a few more here and there, but everybody's got a different strategy. Of course, I have my own strategy. That's why I use a scan, a specific way of doing things. You can follow my strategy or make your own. The whole idea is you want to consistently make profit and take no losses. So we're working on what, 264 days now? And it looks like we get about 21 minutes before the open. So just a little bit about dividends there. A lot of people kind of poo-poo them, like, well, how can you make any money at 12 bucks a month? And it's like, well, you got 1,000 if you have 1,000 different stocks that are paying you $12 a month. I mean, figure it out. I mean, it's 12 grand a month. I mean, it's all a numbers game. You could put all your money, you had $100,000, you could buy all that and say, okay, well, I want to make that 13%, right? Say, okay, got $100,000. I mean, you can do this. I'm not telling you to do it. I'm just saying you could. Let's just say, what's it priced at now? 570. Let's take $100,000, right? Divided by 577. You get 17,000 shares, right? Multiply that by 0.065. You make $1,126 a month. I mean, I'm just saying, but that's all you're going to get out of it, unless you get the strong movement up, the strong movement down. But you're really putting yourself at risk. You're buying 17,000 shares of something. I mean, if it goes down, it's going to move down quick. This value here, you're unrealized. Now, if it goes up, yeah, it does the same thing. It increases in value. So targeting that 78 cents for the year. Multiply that by 12. Make $13,000 in a year, right? 13.5, right? What does that say there? 13.5%. It's just numbers. So there's several different ways to do this. And I do different things with different accounts. These accounts here, I'll show you how you can be in the markets and understand what the power of the money and your dividends can do, and occurrences. So don't poo-poo them. There's plenty of people out there that want to make that quick money, but they don't understand if they were just patient, they could make that same amount in the same year and then not be stressed out sitting in front of their computer all day long. This is something that all you got to do is put your orders in, go do something else, come back. You don't have to watch this all day. I don't. I just put the orders in when I need to. Now, I do respond to alerts, you know, but if I have to go for a week without being around the computer, obviously I'm not putting in any orders. So, I mean, all I'm doing is collecting dividends. What's wrong with that? You know, I can always come back if it's all the way down. Well, I mean, you know, I can buy below what I paid, you know, dollar cost average. If it's well above what I paid and it's close to my target numbers, I can put those numbers in later. So this is a much better system for people that don't want to be tied to the computer, want to have a life, don't want to be sitting behind the computer, you know, 24/5, and then trying to figure out the best way to try to make $100. I mean, you know, if you got any money at all, you start investing, especially if you're young. You know, I would say learn how to save at least 10% of whatever you make and stick it in the market and buy dividend paying stocks. You'll never have anything to worry about in your life. These markets are never going anywhere. People that are poo-pooing them, oh, you know, that's the end. It's going down. It's going down. It's like there's so much money in the world now. These things are never going away. And we're not on any type of, you know, standard. They're just going to continue to print money. But if you're smart, companies do come and go. So that's the one thing, you know, you don't want to be buying companies that don't pay dividends. I mean, yeah, you can take a chance on a new company, but like buying Tesla right now is not real bright, in my opinion, unless you've got big money. Buying one share and not getting any return on your money. I mean, you're just, oh, it's $900. Well, how high do you think it's going to go? I want to double my money. Well, it's got to go to 1,800. So it's, you know, it's a crazy game, but let's see what we got going on. Let's go over here to, this is the actual mosaic within Interactive Broker. I was talking about it yesterday. It's okay. I mean, it's a little quicker to go down and look through charts. I usually use it for this, just for quick reference, just to get a good idea of where everything's sitting. Plus, it, you know, you can keep on changing this and say, okay, I want everything. Just keep clicking on it until you get all the positives. These are all the flats. Nothing's changed. And these are all the ones that are down. I always like to look at the ones that are down. The TLT just keeps cratering. That's fine. I say I don't worry about that. What do I have in this? In this particular account, you got four shares. Who cares? I mean, it's going to collect the dividend, right? It doesn't matter. It doesn't matter what the price on the dividend. This one seems to change quite a bit, but it's continuing to pay, even though it's down. Even though I paid for it up here, it's still paying for it down here. So the next best thing is buying it at a better price, right? Let's hope. Let's see, 167. Let's just call it 166. So it needs to go to what, 83 for halfway. Yeah, that'd be nice. You can DCA that. As long as the scan tells me to do it, I'll do it. You can go up here. This is just a good dividend paying for years. Don't know enough about this one. XEL. But yeah, like I was saying, most of your dividend payers are going to be even, what do you call them, quarterlies and monthlies. The highest percentage of them pay towards like the final week of the month. So we're in that final week. So you'll probably see quite a bit more dividends appearing, you know, on the wrap-ups. You see these ones starting to move here. Lockheed Martin's, some strength coming back in there. Now, I'm just pointing out the obvious. It doesn't mean anything. It could turn around and go right back down, you know. Like SO. Basically, you're looking for something that's changed. You're not looking for anything else. And you don't even have to do this. I just do it because I've been doing it for so many years. I might be able to find an opportunity in this hour and a half that I didn't see before. It doesn't come up on the scan. Maybe there's just something odd going on, but it's never going to, you know, it's not like some lottery ticket or you're going to make $1,000 off some weird event that happens. They just don't happen like that. When we go back to the classic over here for these other two accounts, my TD account yesterday, couldn't get into it for about 45 minutes. I don't know what was going on. Call them, they said, "Oh, there's nothing wrong." I'm like, "Well, there's definitely something wrong. I mean, I had to close. Had a bunch of positions that closed out, and I need to reestablish some positions. You know, and a good size account. I mean, time's of the essence, but I've got it down to where I don't want to be playing around, you know, during the day. I have specific times when I, you know, do the work. I want to have a life outside of this. I don't want to be on it all day long. I started off, made a few videos that were kind of all day long. I wasn't always there. Just turn the volume off and just let them kind of work and whatever people, a couple people said, "Yeah, turn those alerts down." I said, "I know, the volume control on those things is crazy." But yeah, it looks like, you know, oil always pushing these accounts up and down. Anything that's related to oil, as they move in good chunks. But yeah, it's a different philosophy. I'm not telling anybody they're wrong. I'm not telling anybody they're right. It's just I have a different way of doing things. If you like it, great. Ask some questions. Because it's not going to come to you real quick. I might make it sound easy, but there's a lot more going on behind the scenes here. But no nonsense, no hype. You know. Let me see how I just changed that by scrolling over it by accident. It needs to be 20. Just update that. See what's going on there with ADI. All in all, it doesn't really matter. I don't really care what they do. I mean, so what? It's going down. I'm still going to get paid, right? And yeah, you're only getting paid 69 cents. So what? Yeah, well, if you get 1,000 of those, it's 690 bucks. And you have to start thinking like this. That way you don't get hurt. This goes down. If this goes down $1 on $1, you're down $1. If it goes down $1 on 100 shares, you're down $100. Not that you're actually going to lose that. You could always sit on it, but you better have a pretty good size account because 100 shares at 150, check it out. Just so I'm not lying to you, it's $15,000, right? So that would be basically, if you did that twice, you'd have two that you could look at on a day-to-day basis. So what are you counting on? Every 90 days, you're getting paid $69. Right? 69 cents times 100, $69. So if you had another account that was, or another stock that was similar in price, you have two. Now if you didn't spread them out, let's just say they're paying 2 weeks apart. Yeah, so you're making what, 1.8% on one, on $15,000, and then you're going to make let's say let's just use this one. So on March 10th, you're going to make 5.9% on another 15%. It's going to take you a long time for your account to grow, especially if you're wanting this thing. Yeah, sure, you could say, hey, I'm going to use the same strategy as far as, hey, I'm going to sell it at 276, right? You don't have to add the dollar for your commissions, so you make $276. It's great, but it better work, you know. If it doesn't, what if that sucker goes in half? You ain't got any money in this account. You're just trying to grow that small amount of money. So you're not having any occurrences. This is the problem with this approach. This is where you cannot, load up with a small account and expect to grow it. That's why people are afraid to try this. Because most people, what they do, is they make the mistake. They listen to so-called experts. They invest 100. They buy 100 shares. They put the $15,000 in there, and then they're told, make sure you put a stop $1 or $2 below. Well, look, you're already down 82 cents. You might hit that. You might lose that 100 bucks, right? It's $100. So you lost $100 right off the bat. I'll never lose anything on this because I'm not. So I'm taking away from that amount, that 157 that I have invested. I just subtract 69 cents from it, right? So 157 minus 69 cents. Now I've actually only paid 156.31. I don't care if I have this for 20 years, right? It's 276 a year. So on one sheet, 276, 157 divided by 276. It would take 56 years to pay for this, right? Because you're paying 1.8%. They don't really care. You just never get rid of it. It's constantly taking away from your cost basis. They don't show it on yours. There's some platforms that do, and I can't remember where I saw it. I think on TD, when you're doing options, you can have it set up that way. And when you're doing, I think E-Trade has that on their advanced platform, but that, I just use their regular platform for this type of trading. I don't get into the weeds on their pro platforms. I'm just more used to the interactive broker. I remember the days of Capital One, simple punch in your, this, that, and they have like the simpleton charts, and most of your discount brokerage that you're not paying a commission on, you won't get this type of platform, which is fine if you're just an investor, and that's what most people ought to be, in my opinion. I mean, trading, yeah, if you want to become a trader, go to school for it. Become a good trader. You can make some money on it, but boy, it's a stressful job. I did it for many years while I was, running a business, and I was just over 50%. I made enough just to cover commissions. But one thing I never strayed away from was investing. I was constantly making money, so whatever I was losing or slowly gaining trading, I was always building my accounts. And it's important not just to have one account. You need to have a retirement account, a cash account, and then have several accounts, because you don't want to leave all your money with one brokerage firm. They could go away tomorrow, and then, you're supposedly protected. It's just like a bank, but you can't leave your money in a bank. What are you going to do there? You're going to make 0.25%, quarter or 1%. Yeah, they're doing this with your money. they're investing in. And they're not going after high dollar stuff. They're going after stuff that just pays in the 4 to 6% range, and they're happy with that. They love it, but their numbers are huge. You're talking Warren Buffett numbers, billions. And they talk about high. What was that I saw the other day? High yield CDs, 0.1%. Like, really? That's your definition? All right, so what's going to happen on the open? Are we going up? Are we going down? I'm thinking doesn't matter. Everywhere I look, the numbers are different. Platform to platform. Go over to investing.com. It's pretty close to this, showing 15. Yeah, a couple points off. Europe suffers record GDP losses. Shocker, huh? Are you going to bring the markets down? Or is it just going to keep on doing what it's been doing? I think the latter myself, but what do I know? All right, but 1 minute. Always exciting. And we're off. So obviously, if you're already invested in stocks that have an ex-dividend date, there's plenty of resources out there where you can go to look and see what's actually going to be ex-dividend date the next day. And there's people that use that strategy, but the problem with it is you don't know. I mean, that's just one aspect, and people like to get focused on one aspect of it. They don't do any research. And hey, yeah, it's paying dividends, but is it paying more dividends than it did, or is it paying less? I mean, there's a lot of good examples out there. So, and you can go to like NASDAQ, dividend payers, dividends.com, all kinds of different places. But of course, these companies want your money, and I want the dividends. So it's you want my money, or you need to pay me. It's like a bank would say, "Yeah, well, we'll give you some money, but we're going to charge you 10%." It's up to you whether or not you want to pay that. I don't borrow money. Use a credit card, pay it off every month. That's what I've done for 25 years. I don't pay interest. What was that saying? Those who Those who understand interest earn it. Those who don't understand it pay it. Yeah. Hopefully this isn't just going to be a flat day. But if it is, I got things to do. Why that changed in a hurry. Looks like we need to put an order in there. See what the bottom was on that. 69.29. Is that right? Yep. Let's do that. Now I need to go over to the classic and do it. PNW. $69.29. 2. Get this out of the way a second. So 2. back over to the mosaic. And you see this one's kind of running down. Kind of easier to follow ones that are taken off on mosaic. They're constantly switching positions. So see these oil stocks are trying to recover a little bit. That's their financials, TF, CLM. You can see some of these have pretty high share amounts. So you can bet that they've been in this portfolio a while. And that's fine. Their job is to collect dividends. Put an alert in on this one, just in case he decides to come down. You're not using your alerts. They're a great help, especially when you start getting up into, you know, over 500-600 different ones. I don't have all portfolios open because if you had alerts going off from everywhere, it would be a mess. I mean, you have to do one thing at a time. You have to have different portfolios doing different things. You know, the smaller portfolios, you need to pay more attention to them because they tend to, how can I put this? Their volatility in most cases, as far as your earnings go, you can actually make more a higher percentage yield with a smaller account than you can with a larger account, because it's just a numbers game. As your numbers go up, your percentages come down. we're just looking around. When it comes to these ones that are doing nothing, they tend to do nothing. So you just like let them do their work, you know. And a lot of times you'll see the zero ones. You'll see a lot of like this LDP monthly payer. It's a CEF. I love these things because once you get max shares on them, all it takes is a spike up and you're out, and you start the system all back over again. Or it just sits there and does nothing, or it goes down, or the max shares change. I mean, it's a no-lose situation with these. That's what we like. No losses. I need to open up an account over at Tasty Trade, and because they have zero commissions as well. Fairly new broker firm. I mean, they're options experts over there. I wouldn't tell you that I know anything more than what I know. I'm no expert, and that's for sure on options. I've traded them in the past, and I'm a 50-50 player on it. You know, paid commissions. I know how I use them, and the only thing I would use them for is on my larger accounts. I will sell puts, but that would be more in a down market. I do not sell calls. I don't buy calls, and I don't buy puts. The only thing that I would be interested in is something more along the lines with Buffett and the larger players use. But I do it on a really small basis, a very small percentage of the portfolio. If one of the ones, like a lot of these accounts here, I may have traded one multiple times, and when I ended up getting stuck with it, then I just hold it. And you'll see those, something like BP. It's usually an old stock or something that I'll do that on. But you can make a couple percentage points on those if you play them right. And, you know, you can make some, you know, weekly dividends. So there again, there's some more occurrences. And but you have to understand what you're doing with them before you even attempt to play with them, because they can they can hurt you if you don't know. You have to be willing to take ownership of some of the stocks. You're a good boy. Yeah. No, no activity this morning. That's surprising. I haven't seen that in a while. Look, trade logs, nothing. That was yesterday's. Yesterday was busy. Yeah, we had, yeah, a bunch of sells. 23rd yesterday, yeah. Yeah, a bunch of sells. The smaller account. I think this is a cash account, maybe. I can't remember. Too many accounts. We're still sitting on about 9 grand to go back in. What's this other one doing? But yeah, this is a little more pleasant on the eyes, and a lot of people I've showed like this better. But you know, they always end up going with a discount broker because, you know, invariably, if you're just starting out, you don't want to be paying the commissions, and we don't know how long this is going to go for. I mean, it could be forever. We don't know, but I mean, at any time, somebody could buy somebody else out and say, "Oh, well, we're going to start charging commissions again." So you need to know how to adjust, you know, your strategy, and I say, okay, like in this case, I have to pay $1 per side, right? So if I'm buying something, I got to pay $1. If I'm selling it, I have to pay $1, which I'm fine with. I mean, I've been doing this long enough, and I understand what I'm getting for that dollar. But you know, you start getting, if you're just starting out, each one of those dollars can matter, because the closer your sell price is to your cost, the better the chances that, or the higher the probability that you are going to hit that. So take, for example, on this one that's on the screen, TCPC. So let's just say I bought one one share. So we know it's going to cost me $1, right? Um, on the sell side. So the actual sell price, if you didn't have to pay commissions, would be 11.90. In this case, I think there's what? Let's see how many shares are on this one. There's 10, so it's 10 cents. So instead, you pay it'd be 12.80. So you'd have a better chance of hitting that than I would if you were at a different brokerage, or if you're using Interactive Brokers light version instead of the pro version. You just wouldn't have this type of charting capabilities and all the bells and whistles that go along with it. But in my opinion, I've never had any problems with any of my executions in 25 years. Some of my other accounts, they're just set up a little bit differently, but they all follow along the same guidelines. Don't lose money. Let's see, this one's actually, what's going on there? There we go. You can see everything's up quite a bit. Let's see what the positives are doing. You can see up here, that's one BPT. You can see over here to the right. Well, it's kind of off your screen right now. Yeah, I don't think you can see that, but the dividend amounts, they don't pay dividends anymore, but it's, I won't take a loss. I'm just not willing to sell it because, I mean, it could possibly come back in the future and start paying, which I've seen it happen many, many times. And there's another one, but this is what you call a warrant. It's just something that was paid on a transaction by Occidental Petroleum to its shareholders. So you can see it was worth $7, and I only have one. So it's just like, you just let it go. It's a little lottery ticket. Maybe it pays, maybe it doesn't. Who cares? That's like anything else. If you have more of something, you've got a better chance at having something happen instead of sitting at and looking at one. Now, if you're retired and you've got all kinds of money, you can, you know, you want to let somebody manage your money, that's up to you. It's your money. But you could say, okay, hey, I got $1 million and I want to put it into, I always use Coke. It pays about 3.5%, so you can make 35 grand a year, maybe 40 grand if it comes down in price. It just depends on where you buy it at. And I mean, if you're happy with that, that's fine. I mean, you don't have to do anything. You don't have to play this game, but you wouldn't have to pay any commissions. If you did it yourself, just throw it in your own account, spread it out. You had $10 million, have 10 different accounts, spread it out. It makes the same amount of money. It doesn't matter, if you're looking for an occurrence to sell it, but the whole idea is if you got that kind of money, yeah, let's say it doubled in price. You're like, okay, yeah, I'll sell it and go buy something else that's a lower price. I mean, that's a, world-class problem to have. But, starting off, you got to understand how to grow it. You don't take that approach. You don't have that $1 million spread out, in 500,000 stocks. You know, I mean, you could. You definitely have less chance of losing it, you know, but it's that same, I guess Warren Buffett's approach is like, is this company going anywhere? You know, and my idea is it's like, okay, when you're small, you know, you don't want to be taking $10,000 and just pumping it into Coca-Cola, because at 3.5%, now this isn't financial advice, I'm just telling you what I wouldn't do. I would rather spread my money out and have a chance to make more than 3.5%. Most of my portfolios range anywhere from 8 to 15%, depending on the size of them. So, and you know, that's just the dividend amounts that you're making per year. If you start looking at taking in the occurrence of your trades, which means you're selling for a profit, because we don't sell for a loss. The only way you take a loss is if the company went out of business or was delisted or something happened. But I mean, it happens. Don't get me wrong. You know, I've had it happen to me in the past, but as of right now, what are we looking at? 264 days without a loss. I mean, if it happened once a year, in 20 years, you'd have 20 stocks off your list. And if there were only 0.5%, you lost 5% of your portfolio. And that's just depends on what they're priced at. I mean, there's so many variables that go into it, but you know, what happens if Coke just, I don't know, get on some lawsuit and it's like Coke causes cancer, you know, and that price you bought, just happened to buy 1,000,000 shares, or you bought $1 million worth, and whatever that it comes to in shares, it doesn't really matter. But let's say it goes in half. Now it's worth $500,000. Are they still paying dividends? Well, we don't know. Well, the situation would dictate. What happens if they stop paying dividends? Now you're stuck with a stock that doesn't pay dividends. You paid $1 million for it. It's worth $500,000. What are you going to do? What are most people going to do? They're going to take that loss. They're going to take that $500,000 loss. Now, how long is it going to take you to make that back? Now, if that's all the money you got, that's a bad hurt. If it's just a small percentage, you know, like you had $100 million, I think you start to get the idea. So base your decisions off the size of your account. How much money do you have to invest? Split it up amongst the people that pay. If you want to find out the ones, you know, everybody's got a different way of doing it. I don't care what the company makes. If they're paying me dividends and they're increasing their dividends, hey, that tells me they're making money and they're growing, meaning they got to pay up more dividends. They don't want to pay taxes. They don't want to pay these high tax rates, so they pass the dividends along to their shareholders. Makes them happy. Keeps them invested in them. Yeah. Pretty flat on the ES, but NQ's down good size, and a lot of action this morning. It just, you know, when it comes to the indexes, they're not reflective of the stocks that you'll hold that are dividend payers. I mean, every once in a while you see one just take off for some reason. It's like, it's usually some institutional buying or selling. And you're like, what happened? I said, I don't know. But yeah. Oh, I might get a hit today on MPLX. Close that puppy out. Almost there. Been a while. Keep that up on the screen for a bit. I'm going to get some tea. We've got about another half hour to go. Can't believe it's only been a half an hour. It seems like it's been forever. heard something go off. Let's see what we find. FNF. I think we're zeroed out of that. Don't think that was on the scan, but we got to make sure. Nope. We can just remove all this stuff. Let it go. Those unexpected ones. Back to mosaic. The hole is really starting to move. Overall flat. BBN keeps on tanking. Still no losses. Let's check that VRTS since we're moves around a lot. You can see boom, 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 boom. That was from yesterday, but it's not on the list, so we ain't worried about it. Go back and some pretty unusual movement for a CEF. Normally doesn't move like this. All right, we got about a minute left. Looks like a pretty uneventful day for hump day, but we'll continue on this afternoon, come back about 30 minutes before the close to see what actually happened on the rest of the day. We'll talk a little bit more about some dividends and how they work. Pretty simple, straightforward stuff, but don't assume everybody knows everything about them. Take a look at these last couple here. And keep getting this, this push higher with all these oil corporations. But we'll see what happens later. I got things to do. I'm sure you do as well. But keep on collecting them shekels, and we'll see you on the other side. Out for now.